Now, before we are going to start trading and I'll tell you all the techniques, let's just step a step back and take a look at the bigger picture of what trading really is. So, let's start with an introduction to trading. Well now, what is trading? Trading in foreign exchange markets averaged 4.3 trillion per day in April 2013. This is a quote I did not make up. So you see, the Forex market is one of the biggest international markets there ever was, and it's growing day per day. It is international and regulated. Of course, you will find some online brokers who are not regulated but who still offer to trade on the Forex market. I would strongly advise against them. And here in this course, we're only working with regulated brokers, means there are authorities behind them, most likely from the state, from the Security and Exchange Commission, who are having an eye on them so that they can run away with your money or do things they're not supposed to do. Now, trading also offers various ways to trade. For example, the big main topic is Forex trading, but you can trade commodities, stocks, options, futures, shares. There's nothing that you can trade on the Forex market. However, in this course, we're going to focus on option trading only. Now, you've got to see money as a tool in order to generate more money in this course. We're going to keep risk at the lowest level with our money management system, which I'm going to present to you later on. So, very short, this is how the normal life cycle in trading looks like. You've got an investment, you're going to trade with it, then you're going to take out a profit, and in brackets, because that's optional, you can now split the profits from trading 50-50, take one half for yourself and enjoy yourself and take the other half for reinvestment, or do it like me. I'm putting 90% of my own profit back into trading in order to generate more profit, in order to invest more, and you can see this circle is a never-ending story, because in the end those 10% that I'm taking for myself are going to be a lot more than they were before, because I reinvested 90% of all my profits directly into the system again. So the course goals here are, we're going to go over trading patterns. Means I'm going to tell you how to read a chart, I'm going to tell you what to look for, and in the end you will open up a chart and you will instantly see if the market is in a good condition to trade. Also, I'm going to go over money management, as I just said, because if money is the tool, then we gotta better take care of the tool. I'm also going to tell you how to install and set up the MetaTrader, which is going to be our main tool in order to read charts and place our right entries into a trade. Then we are going to cover finding the right entry, because we will get to the point where you think that you've got a feeling for a good situation to trade, but most likely you won't enter the trade because you're not quite sure if you can trust yourself. So we're going to build up your self-consciousness and you'll be able to find the right entry into the trade at the perfect time. And also we're going to take a hit on what to take care of in terms of news, market hours, global events. So there are a lot of things other than chart reading who are very important in trading. Like if Apple is going to release the Apple Watch, which they just did, then you can be sure that the Apple share is going to go up and down again. So this is called news trading, and we are also going to take them into account. So, in order to get you started with this course, I've thrown together a few things that you might need in order to get the most out of trading. Here we go. You need a computer with a stable internet connection. Well, if you're seeing this video, I guess that your internet connection is just fine, so no worries here. You're also going to need the MetaTrader 4 software. No worries, this software is free to use and there is a demo account that lasts a lifetime and it's going to be more than enough. Also, you're going to need Windows XP, Vista 7, Windows 8, 8.1 or a Mac OS X system in order to get the MetaTrader up and running. I highly suggest that you're using the MetaTrader in order to follow everything just as I'm doing it. Later on, I'm going to introduce my software that I've been written myself, and there you would have to need a Windows system, or you can just use the web access, so for all the Mac users you're not excluded. Now I'm just going to show you how to install the MetaTrader 4 on your system and how to create a free demo account. Well, here we are. Now just Google for MetaTrader 4 and click on this link right here. As you can see, the MetaTrader 4 also appeared for Linux, so that really everybody can take part. You can also download a version for your iPhone or for your Android smartphone. So I'm just going to go for Windows, and there's a download. As you can see, I've already installed it once, so I'm just going to open it right here, but I'm not going to actually install it once again. You just have to click yes, and then that's it. And now I'm getting to the page after the installer. So I'm ready, and now I'm just going to show you how it looks. So it's opening up right this. Now I'm not logging in. So those are my charts. This is the MetaTrader 4, and well, for me they look quite good. Oh yeah. So anyway, I'm going to show you how to open up a new account. So you just have to click on File, mine is in Germany, and then right here in order to open up a new account. Then you've got a choice, because there are different sources where you can get the charts from. There is no central point where all brokers in the world get their charts from and they're updating data. So I've been choosing ADS as a demo from ADS Securities Limited, and I would suggest you to do the same. Now I'm just going to click on Continue, New Demo Konto, because we're not going to open up a real konto. New Demo Konto. Well, as you can see here, it's already written in. Just write your name, your address. It doesn't have to be exactly right. And then just select that you want to trade in US dollars. Leverage, no worries about it. Here also, don't worry about it. The only thing that you really need is to get access. I'm always entering a fake email address right here, because you have to click on get the newsletter in order to click on continue, which is quite annoying. However, no worries, they're not going to send you spam, and as I said, I'm already entered a fake email address, so you won't need those emails. Now click on continue, and here you can see my console data, which I'm going to change of course after this video. Now I'm clicking on I'm done, and now you can see right here that the connection
incoming mail
is established, and also I've got incoming mail, but I've got incoming mail right here. So this is how you're going to install the MetaTrader, and later on I'm going to tell you how you get your MetaTrader to look just like mine. Now I'm going to tell you how to install the custom indicators in your setup MetaTrader 4. So first of all, you got to go to singaporesignals.com, which is my normal site where I'm doing my personal coachings and mentorings. Now you're going to click on Students area, Downloads, and you should be redirected to a site telling you, sorry, this is for registered students only. However, for this course I created an account. So username is course 2015. Password is I want the software. All lowercase together, no spaces. Then you're going to click on login. Logged in successfully. So now I'm just clicking no. You could also take a look at my past webinars, but I'm also going to cover them in this course right here. Now you're clicking on downloads, And right here, you're going to click on Singapore Signals 60 seconds package. Now it's a very small file. As you can see, they are also password protected. So I'm going to put them right on my desktop, and here I'm just going to show you the password in a small box below. Or I can show it to you here, even better. This is the password. It's a German word. So, clicking OK. Already done. Now I'm going to open up right here, going to my desktop. Now you can see the files here. It's a TPL and a candle time EX4 and also how to use document. So you're going to take the TPL and the EX4 files, you're going to copy them, and then you're going to go to your system, programs, search for the MetaTrader, go into templates and just paste them right here. I'm going to do this right now. Yes, I want to replace them. So you see candle time 60 TPL. Now just open up your MetaTrader and do a right click at any place in your chart. I'm just going to open up a new window. So normally, well, since it's weekend at the moment, I'm not getting any fresh charts. So I'm just clicking here, click everywhere right, select template, and now click on 60. And then you should be ready to go just like this. Or you can just go on, where can I set a template? Right here on diagram, template, and if anyhow the template is not found, you can always go on reload, because then all the templates in the folder are going to get reloaded. Now this is the basic overview, and right now you've got no idea what those things mean, but congratulations, you've successfully set up the MetaTrader 4 for trading. Now the hardest part is already done. Now we're going to cover what trading options really mean, how our options build up, and how you're going to trade options. So let's jump right into it. First of all, what are options? Options are a standardized way of trading on the Forex market. So in normal Forex trading, you're going to buy or sell from a certain asset and hope that the course is matching, and it means you're going to buy a lot of assets when the course is very low, sell them when the course is high, and vice versa. Now in options, we are not selling or buying anything, but we are predicting how the market is going. Because options are standardized, once you get the hang of it, you can trade at any broker all over the world, because options always remain the same. In options, you've got no risk of total loss from your investment. Because in Forex, for example, you can forget to set a stop loss order. Means you're buying at a very low point. However, the course is not going up, but it's going down even more, which is maximizing your profits, your loss of course, because you bought at 1.0 and now the course is at 0.7, so that's huge loss for you. And now you've got a choice: either you are going to sell them again and accept the loss, or you're going to wait for the course to go up all the way again, which might never happen or might happen in a few days. And then if the course is going even lower, your broker may say, sorry, but your funds are insufficient, so you can't pay the loss and you can just wait and sit it out. So you have to close the trade and take a huge loss with you. In options, there is no such risk because there is no stop loss order. Here, you're going to set a fixed amount that you're going to spend on a single trade, and you can lose nothing more than this. I'm going to explain this on the next slide. Now, trading has to be done through a broker, because you can't just call at the stock market and say, hey, by the way, I want to place an option. No, we have to go through some sort of middleman. Now I have this smart out right here. You can see we are, where's my mouse? Here we are, and our job is to define the trade. So we are going to define the parameters, then we're going to give it to the broker, who is going to take the order that we just set, and he's going to place the actual trade on the market, who's then accepting the trade. The market, you have to see him individually, because you and the broker, you've got a very close relationship because you're working together. The market, however, is completely separate. Now, in our case, we want the market and the broker to be regulated. Markets regulate themselves, of course, but the broker, they have to be regulated by some authorities, as I just mentioned before. So here, in this case, most European brokers are certified and regulated by CySEC, which is the Cyprus Security and Exchange Commission. Just like in the US, where there is the SEC, we've got the Cyprus SEC, and most brokers are regulated in each country they operate in. So for example, a broker operates in Germany, France and the Netherlands, then also the authorities from those countries are having an eye on the broker and regulating him. Now I'm going to show you how a normal trade would look like if you're going to place it. So you see, the order consists of three things. First, it's the asset. An asset can be everything like currency, euro against US dollar, it can be gold, silver, and an asset can also be wood or water, because some brokers let you place the trades on those commodities. However, in our case, we're limiting ourselves to currency trading, because currencies tend to be much more tradable than, for example, water or gold, because there is no such big movement. If you know, the gold price has been going up steadily, so there is not much movement in the market. However, options need heavy movement in order to maximize a profit. For the asset, you're going to get a fixed payout rate, which is set by the broker that you're using, and it also depends on the asset, the time and current market condition. I'm going to show you an example trade on the next slide so that you can get an idea of what this fixed payout rate means for you. Now, it also contains an expiry time. This can be anything from 60 seconds, some brokers even offer 30 seconds, but 30 seconds is pure gambling, up to 1 day, minutes, hours, weeks, years. So in options, normally every time that you want is possible. There are certain time frames in which you can choose, like you can choose 5 minutes, 10 minutes, 15 minutes, 20 minutes, or 1 day, 2 days, 3 days, 5 days, just because the market is only open 5 days a week, because on the weekend, of course, the markets are not operating, and you can trade options over the weekend, except for if you're doing a trade that is longer than 1 week, but then you have the volatile weekend in the middle, who's going to change your course, because on normal Forex market you also can trade on the weekend, and it means on Friday evening the market closes and we're at 1.0, and normally you would think that if the market is going to open again on Monday, you would be still on the same level because there was no trading, but it can be that it's much higher or much lower, so there's a great volatility, which is why I'm normally trading maximum of 10 minutes, because we're doing a thing called scalping. Means we're taking those high peaks in charts and we scalp them. So we're only focusing on this small part and taking the most profits out of there. So we're going to use much movement in a short time frame for maximum of profits. Now it also consists of the type. Means is it a put or is it a call? If you're placing a put order, you're predicting that the current asset is going down and lower than at the time you placed the order. And if you say call, then you say it's going to rise in the expiry time from the time that you place the trade. So if I'm placing the trade right now, expiry time is 5 minutes, and I'm placing a call trade on Euro US dollar, I'm saying that now in 5 minutes exactly, the rate of Euro to US dollar will be higher than it is now. If I'm right, then I'm going to get a fixed payout rate. Now, I'm just going to show you a sample trade as I promised. So in this example order, we place the trade on Euro to US dollar. There you can see, I made this one up, but it's actually pretty accurate. We've got a 82% return rate. Means if our order and the trade is going successful, then we are going to get a profit of 82% from our trade size. Trade size is the amount of money that you place on an actual trade. Our expiry time is 5 minutes, and put or call type is put. Size, trade size is 100 US dollars. No worries, we won't start anywhere near 100 US dollars because this is part of money management. We're starting much lower. So here I place the trade right here where this arrow is, and you don't have to understand this chart at the moment. You only have to know that green is going up, red is going down. So this chart looks very strange for you maybe, but in the next lesson we're going to dive straight into chart reading, and then you're going to be looking at this chart and it's going to be easy. So I am placing the trade right here when it was very high. I placed a put trade, and each of those candles represents 5 minutes or even 1 minute, it depends, because either way I would have won. So if each candle represents 1 minute, then I'm placing the trade right here, and I'm betting that in 5 minutes it won't be higher than this. Means you can count 1, 2, 3, 4, 5. So current price is here, price before has been there. I place a put call, this is way lower than here. So I'm getting payout of 100 US dollars, trade size times percentage of the payout rate means I'm getting 82 US dollars of profit. Now you may wonder, but your trade size was 100, so where is the rest of the money? Of course you're getting the rest of the money back, and you're not getting the rest back, but you're getting your full trade size back. Means I am getting, in summary, 182 US dollars back from this trade. I'm entering with 100, I'm placing the order, I've been right, and then on those 100 US dollars I'm getting kind of an interest rate of 82%, which is just stacked on top, and then it's going to be pushed back to me, and I've got 82 US dollars of pure profit. So this is option trading, but option trading is great, but you have to know how to read those charts. So let's just dive right into chart reading and analysis. Now we're ready to step up our game, and we're going to dive right into chart reading. So chart reading seems very complex, but it is not. So first of all, there are two different types of analysis if you're seeing a chart and if you're getting into trading. So the first type is called a technical analysis. Technical analysis is focusing only on the chart, so it relies only on the numbers in the chart and the numbers from the past. Means it's inspecting the charts, evaluation of securities, past prices and market activity, and there you can identify patterns by looking at the charts, and you can look out for trends that are currently building. So technical analysis is the complete opposite of the fundamental analysis. While technical analysis is what we are going to do mostly, because we're going to focus on a chart and see what does the chart tell us and what predictions can we get out of the chart. Fundamental analysis is measuring the intrinsic value and consists of the overall economy and industry conditions. Means, like I said before, the example with Apple and the Apple Watch. The Apple Watch, you can't read out of a chart that Apple is going to release a new product. However, fundamental analysis is you know that in 1 week Apple is going to release the Apple Watch. So with this knowledge you can get into the technical analysis and watch out for a big jump up because the smartwatch has just been released. So fundamental is all about global politics and the whole environment, as technical is only concentrated on numbers and charts. Means if there's a war starting or a crisis, then this is all fundamental analysis. So a good starting point for fundamental analysis is just following the news regularly, reading the newspaper and being up to date on events that might influence the currency that you're going to trade on. Like in Europe, if the euro is going to be weak and there's just been a press release from an authority with with an outlook for the euro, and it says, well, euro is going to be even more weaker in 2 weeks. With this knowledge you can now go into the chart analysis and you will know, okay, all currencies affected with euro, means euro to US dollar, euro to Great Britain pound, they are all going to be affected by this global event in your little chart. So when chart analysis is micro, then the fundamental analysis is the macro. So it's like stepping back, taking a look at the great picture, and then stepping back in and concentrating right on the trends. Now, there are different types of charts and different ways how you can show them. There are bar charts, there are pie charts, there are line charts, and there are also candle charts. Now, candle charts tend to look very interesting and very complex, and like only people who study it could read them, but they are the most efficient version of charts that you can get, and that's why we are only using candle charts. And I'll promise you, you won't find any reliable broker or any serious broker who is displaying other charts than candle charts. So, the candle. Let's start with the one here on the left side. So you've got the body, who's a rectangle, and then we've got like small sticks coming out of it, and that's because if you're only looking at this here, it looks like a candle. Same here. So that is why they're candle charts. They have been invented, I think 30 or 40 years ago, so they're pretty old, but they're still the most efficient way of showing movement in the market in every time frame that you want. So for example, if you've got a line chart, then you can see, okay, at this specific time the line has been right there and you can read the value. But what if line charts are only for 1 minute steps? Then you will never know what has happened in this 1 minute. Maybe there was a huge movement, but because the line chart is normalizing the movement into a single line of pixels, then you just don't know what to look out for. And on a line chart you can see a steady uptrend, and in a candle chart it can be just like this, so that the line chart is the median value of all candles. That's why we're going to go into candles, because we're not going to trade on long term, where line charts can be quite useful, but we are going to do scalping within short time frames, and in those short time frames we need the most of information that we can get out of a chart. So I'm going to start with the left candle right now. This is called a bullish candle because the movement is bullish. I'm sure you heard about it, the bull and the bear. So if you see this candle, then one, so from the top of here down to the end of the candle here is the total movement of the asset. Point 2 is the opening rate. That's where the candle started. So if there is a 1 minute candle chart, then every minute a new candle is going to appear. And the first value that is appearing is always the opening rate, which is also the closing rate from the candle before. So candle starts, moves like this, next candle starts and it has to be the same value. If it's not, then it might be that the MetaTrader or the source has not gained all of the information and is just trying to match it accordingly. So from time to time, maybe once a week, there might be small jumps, but they're going to be corrected. And if you see those jumps, just pay attention and wait for 10 or 15 minutes until they are corrected. Right here is the ending rate. That is, after 1 minute, the next candle is going to appear and this candle has been closed. So a bullish candle means the candle is going up. There has been a positive movement. So we're starting right here. Then maybe the value has gone up a bit around here. Then it dropped down to here. And then it has been going all the way up until here. And then dropped a bit and closed. And this is the movement of the whole minute. So those could also be right in here, but for better understanding, it's only the rectangle that says opening rate, ending rate, but those small sticks, they also are equal in terms of movement analysis. So a bullish candle and a bearish candle. Here, as you now probably guessed, there's been a bit more movement because the stick is coming out here. So this candle ended here, and now we can just imagine that this is the next candle, and they're not aligned. I'm sorry for this, but you have to see it just like a straight line. And now this is again the total movement of the candle. It's bearish, means it's going down, that's why it's red. Bullish is often blue or green, or you can find a hollow candle and a not hollow candle. The hollow candle is going up and the filled candle is going back down. So here it opened and then maybe it dropped until here, maybe it got up until here and then decided to drop again until here. Means if a candle is opening and you see, well, it is actually blue at the moment, this might be because the opening rate has been going up here. But once the actual rate is below the opening rate, the candle color will change instantly into red and going back down here. So this candle and this candle, they have changed the color at least once, because here you can see this is the opening rate and it has gone below the opening rate. Then it has been a bearish candle. But in the end it turned up and got a bullish candle, so that's why it's blue. Right here it's a red candle because it started here. Once it got up here, those would be identical because here's the opening rate and here's the actual value, so it was going up. But in the end this candle turned out to be going down and this is the ending rate. If there is no stick here, means that in the movement the lowest position also is the ending rate of the candle that we'll find. Now I'm going to tell you a bit about trading patterns and things to look out for in your chart analysis. And I can only suggest you open up the charts at least once a day for 10 minutes and just go over them and get yourself familiar with the charts and look for patterns, because I promise you will find them, and I'm also going to show you some of them live here in the course. So, problems that are arising with those patterns is you're always looking for a breakout or the opposite of a breakout. Breakout here means it's going more up than we've expected it to go up, and the opposite of the breakout is that you know, okay, it's not going to break out, it's going to go back down again. We're going to trade the opposite of the breakout most of the time, because it's just more reliable than relying on a breakout from a standardized pattern. Problems here is when does it happen, of course, because predicting the market like this would be fairly easy and everybody would be rich. Will the breakout continue? Because the breakout can also happen here and then go back again, and then we've got no profit. Or is the movement too sideways? I'm also going to show you an example of this, because here you see this is a line chart only for the better understanding. Here you see there's a lot of movement, it's like a mountain, but sometimes you'll find movement like down here, which goes more sideways than up and down, and then it's not safe to trade because there's not enough movement for us in order to apply our trading techniques. So this is called the symmetrical triangle, because you can see here, this triangle is only in your head, and you can also take a pen and draw it in the MetaTrader. Of course not on your screen, but there's a tool in the MetaTrader. So for your better understanding. And here is the movement. And now if you see something like this, and you see those points here, just before the breakout, then you could notice, well, they're closing down the triangle, and then there's a breakout, and then you can bet that the breakout is going to be longer, so it's not going back down again. And you can place a call trade here, for example, because you know, okay, there's been a breakout, it's going to go up. Here's another pattern. It's not a symmetrical triangle, but it's a resistance line right here. I'm also going to show you. There are resistance lines and support lines. Resistant lines means that it's restricting the asset from going any higher, like it's bumping off. And support line is like it can't go any lower, and the line on the bottom supports the price so that he goes up again. Like we can see here, this one is called shoulder head shoulder pattern, because this support line was touched once, gone back up, twice, back up, and here it's not as big as here, the movement. So this is the shoulder, because the head is always above the shoulders, and then once the support line fails to support, the breakout is happening and it's going more down. So this is a pattern that we'll also find not that often, because shoulder head shoulder has to establish over a longer time frame, and it can't be seen in 5 or 10 minutes. However, those support lines and resistance lines, we're going to find them a lot, and I'm also going to show you live in the chart. Now, let's take a look at other patterns that might happen. And now you see that we're using candle charts. I've got those charts from 2006 from Investopedia. However, they're great to display because nothing has changed since then. Here you'll see an example of a hollow blue candle, meaning go up, and a filled red candle going back down again. And if you zoom out, those candlesticks seem to be very unreadable. So I'm also going to show you how to set up MetaTrader in order to read the charts and to read the candles properly, but not in a way that you've got only 5 candles, but that you can see 1 hour in the back, but you can still read everything. So here is the support line. You see also our movement sticks right here. It's been touching there, going here, back again, higher. Then you see the candle did not close here, but in the movement it touched the line and got right back up. So the candle didn't even close on the support line, but touched it and got back up. Then the shoulder, not as high as the head, but you see a resistance line from shoulder to shoulder because both shoulders are on the same level. And then finally the support line can't hold it anymore and it's going down and down and down. Here is the opposite, means it's this in reverse. There is no support line, but there is a resistance line where it's been touched here, back down, then also touched here, and you see this is not a perfect head right here. That's why it's sometimes hard to spot it. Touched it right here, back down again, and then this huge breakout, big movement going all the way up. Another pattern that you'll be more likely to find is the candle, and is the cup with the handle. I just read cup and handle and made it candle, which is pretty self-explanatory. Big movement like in half circle, then the handle, and then the breakout through the handle, and you see there's always big movement right here, big blue bars. So you can easily get confused here, because you could say, well, here's big movement too, It is, and that is why for those two trading patterns you have to step back and take a look at the last 1 or 2 hours in order to establish. But if you're taking a look at 1 or 2 hours of chart, then your trade also has to be around 30 minutes or 15 minutes. Because of course, if you're going to place a 5-minute trade while looking at a chart with 1 hour candlesticks, you have no idea what you're actually doing, because in each candle, if one of those candles represents 5 minutes, if you go down to the 1 minute level, each candle will split up into 5 different candles so that you can see what has happened in the candle. There is also this, what we had back here, 2 times touching a support or resistance line, is also called the double. Here I told you, security line, touched it once, big drop, touched it twice, and even bigger top. So now what we're doing is we're not waiting for the breakout, but once we've seen that there might be a security line, we can place a trade right on top and say, okay, it's going to be a put, so it's going to be going down again, and this is more likely to happen based on my personal experiences. I know there are people who are trading just the opposite way, but I want to teach you this method because for me it works best. Here is the same support line, and it bounced off right here. So there are also times where you've got a support and a resistance line, like here. Here is a support line, and here is also a resistance line, because it touched it here, then there, and got back up. But it's more likely to find resistance or support line. And here's the definition for it. After 2 unsuccessful attempts of pushing the price higher, the trend reverses and the price heads lower. So it's reversing here, it's reversing here, reversing here. And we are looking for points where the trend is going to reverse itself, because then we know, okay, sure thing, we're going to place a trade and we're going to hope that the pattern is going to establish even further. That's the end of this basic chart reading. Now we're just going to dive right into the charts, and I'm going to show you some real life examples. We're just at the chart right now, and I'm going to show you in real-time charts a bit of where you can find those patterns that I just mentioned, and most importantly of all, where you can find support lines and resistance lines. So let's jump right into it. You see, I set my MetaTrader to the asset Euro US dollar. You can select it right here, and to M1 means 1 minute, 5 minutes, 15, 30, 1 hour, 1 day, monthly, all of this. And you can add new currencies by clicking on Window, Add New, and then you can select one of those. And when you selected those, just click on Template 60 as before. So let's take a look at those charts and see if we can find things I've just mentioned. Well, for example, white right here, we've got a very weak, but still it is one. I'm going to zoom in. Whoop, think I lost it. No, right here, this also is right here. This is also a resistant line, because it tried to touch it once, didn't work, twice, didn't work, and here we've got the breakout that is happening. It's just like on the chart from 2006. First unsuccessful try, second unsuccessful try, and then the breakout. So I'm going to zoom out of it. Let's look for another one. Well, of course, right here. This is a perfect example for a support line, because right here, try to touch it, got back up, then try to touch it, got back up again. Now what do we've got? huge movement here, and you see in this candle there's been amazingly movement, because it got all up here, then the next candle started, and you see here the candles are matching up, they're aligning always. So the end of this candle was the beginning of this candle. It got down up until here and then got back up, and if you see the total movement from before, it moved nearly 4 or 5 times as much as every candle before. Now here, not too much movement. Well, this could be a candle right here. If you see, this is the half circle. Here is the handle, and then it's not going up, but there's huge breakout right down here. But that's not a good candle because it's just too wide here. It's been too long of time. So I'm just going to switch charts and see if I can find anything more useful right here. Well, of course, here next resistance line is right here. Got down, tried to touch it once, twice, got back down here, and then the breakout, although it wasn't the biggest breakout. However, for now it's good enough to show you, because as I said before, it's weekend at the moment and we're not getting fresh chart data. And this is all from Friday, and Friday is always a bit tricky to trade on. Well, we've got another support line right here. As you can see, touched it here with the candlestick, touched it here, got up, touched it once more, got up again. So here you would normally have already guessed that it's going to go up again. Also, you can see that my indicators are showing, but those indicators, I'm going to explain them later on, and also how you're going to install them. No, they are delivered with the template, so you don't have to install them at all. Your charts should already look like this, but for the moment you don't have to know what those fancy lines mean. You just have to know how to spot those resistance and support lines, because we're going to be relying on those 3 indicators right here, and they're very easy to read, I'll tell you. But for your own safety and in order to get a basic understanding of chart reading, it's always good to look out yourself for some resistance and support lines. So here you can see the same big movement that I just showed you in euro to US dollar, because euro versus US dollar and euro to Japanese yen, they are of course correlated, because euro is in both of the currencies. Means if euro Japanese yen goes like this, then we are going to find this in euro to US dollar also, because they directly affect each other. And we can see here, when has it been? 12:30, you can see down here. And this movement should have occurred right at the same time. And if we double check, here it's also 12:13. So same movement, because they are related with the euro, however 2 different assets. So also keep this in mind. Now right here, of course, we've got this support line without any other. Well, right here, a super long support line, but this is a time frame of 4 or 5 hours, so don't you worry, it's only for the record. Here you can see my indicators going down, and right when they're all down here, it's starting to reverse the trend, because we have been looking at this trend, and by then you can recognize it. One last support line, resistance line, I'm sorry, right here. Try to touch it once, twice, thrice, and 4th, going back, and then on the 5th it got up a bit, and on the 6th time it really break through and didn't go down anymore. However, those indicators are not very suitable for those support lines or resistance lines. They need much more movement, and you can see this is a very sideways movement because the candles are not that big. This is very good movement in the market, and this movement here absolutely not tradable, because there's just nothing happens in the market. You see those candles are very slim, means there was no movement and they just got right onto the next candle. So stay tuned for the next lesson and just open up your charts and take a look and try to establish some of the patterns and lines that we've just discussed. See you. As you've probably guessed, also in trading there are several tools that help you in order to analyze and read the charts properly, who can give you more insightful information on the charts, because in the end the charts are just numbers, and we know numbers can be very crucial. If you have to have a quick overview and you've got a list of numbers, it just takes too long. So there are certain indicators which you can think of little programs who are taking all the numbers from the charts, threw them together, do their magic, and then there's a line or a graph or a color that comes out and it signalizes what's going on in your chart. For now, I'm going to tell you about 3 basic indicators everybody should know. Also, they are my favorites. And then later on, I'm going to explain to you how the custom indicator that is free included in this course is working, because it's custom coded back then only for me, but then I improved it to make it more understandable for everybody, which gives you a very nice and efficient overview over each chart. And it's 3 indicators working hand in hand in order to ensure the best trading experience. For now, I'm just going to concentrate on the basic indicators right here, starting with the Bollinger Bands, probably my favorite indicator. They were invented by John Bollinger a long time ago, I think about 1970, 1980, and they consist of the moving average, which is the red line in the middle, and then there are 2 standard deviations above the moving average and below the moving average, the other 2 red lines. Now, I'm not going to talk about how those standard deviations work, because it's statistics and it's from math. As I told you, there are numbers, and so math has got its fingers into it. But since this is only an introduction course and I don't want to lose too many course participants, I'm just going to say it's a standard deviation, which means standard deviation is something that is the likeliest that is in predicting. So the prediction is very likely to happen like this because it's the standard deviation. They give you a relative definition of high and low, because sometimes if you look in the chart then and you scroll, you see that the chart is adjusting itself by height depending on the time frame that you're looking at. So if I'm scrolling back 1 hour and courses were a lot higher, I won't notice because they've been shifted automatically down, so I don't have to go up in the chart, but I only have to go left or right. However, those take the past prices also into account, so that you know, is this high compared to 1 hour before, or is it probably pretty normal? Now, as you can see here, those bands are like encapsulating our assets. Means if an asset is touching the band below, most of the time, of course only, it's going to reverse. So those are like the resistance line and the support line, but they are relative support lines, because as you can see here, it's no straight line, but this line over here is changing and is giving you an overview. So it's bouncing here and bouncing right here again and down here. So you see every time the assets and the candle is closing above or below the Bollinger Bands, then it's going up again. So again, the whole candles are going up, the filled candles are going back down again. So here it has been closing right on the line, forcing it to go up again, closed above the line, then directly on the line, and here going back down again, closed below the line, going back up again, closed here, going back down again. So Bollinger Bands are super cool and I really like them. They're like my favorite indicator, if you can say so. And I often use them together with my custom indicator, only to get sure and to see that Bollinger Bands also provide a very simple but very effective warm form of trading. You can add them in your MetaTrader if you go on Insert New, and then you've got a whole list of indicators, and there are also the Bollinger Bands and also the other tools that I'm going to show you right now. So jump right into next is the MACD, which stands for Moving Average Convergence / Divergence. So again, moving average. It looks a bit more complicated, and I'm also going to break down to its core functionality. So there are two moving averages, one fast line and one slow / signal line. Depends on where you look because there is no standardization. The fast line is the moving average of a shorter time frame, and the slow line is the moving average of a wider, longer time span. And as you can see here, if the fast line crosses from below to above, buy signal. So the fast line has to cross the slow line from below to above. And let's take a look here. And this is a buy signal. Buy means you buy low because it will go up, and fast line crosses from above to below. So if this is the signal line and the fast line crosses like this, then it's going to be a sell signal. And just take a look right here. Those bars in blue are the signal line. This is the zero line. Zero line is just in order to know where you are relatively. And then the red line is the fast line. Here, red line is crossing from below to above. Means that it's the signal right here. And then here it crosses from above to below, means this is a sell signal. Means right here you should put a call trade because it's going up again, and here it's crossing from below to above, means it's a sell signal, and you have to put a put trade right here. Next is the RSI, called Relative Strength Indicator. It's also working with prices from the past, and it's very simple because there are only two values that you have to remember. The line in the middle here, it's just a screenshot, it doesn't look this complicated. The lines here are just my custom indicators, so ignore them. And it tells you how many people are actually buying the asset and how many people are selling it. So if it's above 50 and it ranges from 0 to 100, and there's one line in the middle who is always 50, and this is this line right here, and in this case the line right here, because I wanted to show you both examples. And if it's above 50, then there is an uptrend. When it's above 70 or near 70, it might be overbought and the end of the uptrend is soon. As we can see right here, this is the 70 line, and the moment that we are crossing the 70 line, the next candles are going to go down because the uptrend is ending. And right here below 50 is the downtrend, and below 30 is oversold. So downtrend means a lot of people are selling it. Below 30 means so many people are selling it, it might reverse its direction. And here we are at the 30 line. Just keep in mind, this is the 50 line, this is the 30 line, because it's just a screenshot, and here on top is one line more, and here is also one line more because they're just missing on the images. So here we are below 30, means end of downtrend soon, downtrend right here, and is ending when we're crossing this line. So this candle has first crossed the line, and the next candle is already going up again. And you see here it's been going down, 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 and then closed right up there, and now there is an uptrend evolving. So those should give you just a few indicators that you can apply. As I said, just apply them in your MetaTrader and play around with them. I would suggest you to take RSI and the Bollinger Bands because they are fairly easy to read. MACD is quite powerful, but you really get to know your stuff. Plus, it's not very accurate if you only take MACD alone, and you have to know for which time frames you want to set it. means you got to choose another time frame for 1 minute or 5 minute charts because the MACD won't adjust itself. So for now, just go with the Bollinger Bands and see how they work, and just apply the RSI to one of your charts and take a look at the line to understand how it works. Hi there. So now I'm going to show you our custom indicator, which I've been talking about a lot of times before, and now we're finally there. So I already shown you how to install the custom indicator by putting them into your folder. I'm just going to show you once more. So you're just going to your OS, Programs, MetaTrader, Templates, and the file that you downloaded from the website, 60 TPL plus candle time EX4. You're going to put them right here, and then by right clicking in your chart, template 60. So now I'm going to show you how this indicator will indicate good trading opportunities. First of all, we've got the RSI here, which is the relative strength index that I've been talking about before. And you're going to see two lines here. Here's a line that says 90 and a line that says 10. Means it's going from 0 up to 100 right here. Now, the RSI is only interesting to us when it's either below 10, as here, or it's above 90. Below 10 or above 90, which you can see quite nice because then it will leave this area right here. Here we've got the money flow index. Money flow index goes from 0 to 102, and it's only interesting to us if it's either at exactly 0 or exactly 100. So right here it is at exactly 0. Next is the DMARC index, or also called the DMARCer, and this one goes from 0 to 1, and surprisingly it's only interesting if it's either at 0 or at 1. So all those times they don't interest us. This is what's interesting, this is what's interesting, right here and here. And now it's pretty simple. We take a look at this point here. We have been at 9.7981, means we've been below 10. Also, MFI has been at 0 and DMARCer has been at 0. Means we're going to wait for the next candle to appear right here, and if this candle is going to go even lower, like here at 8, then we can be very assured that the trend is going to change direction and it's going to go upwards again. Like there was the resistance line here, and the resistance line is indicated by those three indicators. And you can see here, if we would have placed a call trade right here, and I'm in a 1 minute chart for 60 or 90 seconds, this would have been a clear win, because here is 60 seconds and here is 120 seconds. So look out for those. I'm just going to pick out some other examples. Right now it's the weekend, so it's pretty good. Here, for example, normally if you've seen this, you would have traded before, because you would thought like, well, it's going down, 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 it has to go up somewhere. Also, RSI has been in the negative since this candle right here. However, as you can see, money flow and DMARCer, being they're great indicators because the RSI alone won't help you. They say no, it's not yet 0. And the first time those both go to 0.2 is right here in this candle. And then we are waiting for the next candle. RSI still below, still 0. And then it's going all the way up right here. You can see there's been a big movement in this one candle. So normally you would have entered right here at the bottom, and then it shot up right here. So another clear win. I'm just trying to show you a good put. Well, I think this might be a good put right here. Right, so here we've got the RSI at 95, 100, and there's a rounding difference, it's also on 100. And you can see here, whoop, enter the trade right here, and it's going down here again. But however, that's not too clear. So if you see those huge jumps and those like stairs, then better stay out of the trade, because that's heavy movement, and as you can see before, there's been nearly no movement compared. So this wasn't a very good and clear signal. What do we've got here? This has been an example I've been showing before. It's still the same weekend, I'm doing a video shooting marathon. So, of course, for example, here it worked out quite well. Indicator is high, 100, 100, and it's going back down here again. But I wouldn't have traded this, because with this movement right here, this is just not a safe opportunity. So, something else that we've got. Well, right here, for example, it has been falling and falling and falling and falling and falling and falling. Yet, here is the first time there's been an indicator, and we're at 8.9 right here. Next candle is also at 8.9. Those are still zero. Now we're placing our call, and as you can see here, next candle is going upwards big time. So, anything else? I'm just going to change right here. Here, same thing. Candle goes up here. We're at 91, 101. And next thing that's going to happen is going to break down right here. Here, same example. Exactly at 90.8. Still it's over 90. Here 1 and 101. The next thing that's going to happen is going to break down. Same thing here. It's also happening right as we predicted. And well, not here, because RSI looks good, but this is only 94 and money flow is only 0.9. So don't trade, and always wait for money flow and the DeMarco index. So I'm just going to take a look at the last currency now to show you some nice things. We've got here. Looks quite good also. As you can see here, going down again, and the indicator is indicating right. Here it's nearly the same. However, money flow, no, DeMarco is not at exactly 0, but at 0.04. This depends on your trading strategy. Normally I would have also traded this one, because as you can see here, perfect uptrend going up. And here's also a resistance line, as you can see here, because touching here, 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 and it can't get any higher. So it tried to go here, there, there, here, and then decided to go back down here. So I'm just going to draw this in. Here you can see a nice resistance line. So, one more example. As I said before, if you see those stairs going up, then also the indicator is weird, because here it's over and over again, and it's an indicator that it's going to go back down again. Here it does for 2 minutes. However, if you see this movement, just don't trade it. Also, it has been a Friday, so you see some pretty strange movement right here. Here, same, it's been going all the way up, and the second that we're really up here, it goes back down, but only for 3 minutes. So here is exactly the same. Here, that's quite nice. Small trading opportunity, but still, if you place a put trade here, for the next 3 minutes it was going down constantly. Same as here. And also if you take a look, same as here, going up right there. So this is how you're going to use the custom indicator. For more live trading, please go to www.singaporesignals.com, and on the first page you will find videos of me doing live trades using only this indicator, where you can see how I'm actually placing the trade and winning money. So in order for you to really understand the indicator and when to get a good entry, please just visit the site. I'm going to show you the link below right here. So that's it for the custom indicator. I hope you enjoyed it, and stay tuned for our next lesson. Bye! Before you will be able to trade, you're gonna have to set up an account at the broker of your choice. Now on singaporesignals.com/broker you can find my two choices that I'm using and I'm normally recommending to all my students, because their courses and their assets match my system the most. Because you have to imagine that every broker is getting their source for the charts from another point. Means MetaTrader gets the charts from point A, your broker gets the charts from point B, another broker gets the charts from point C. So you're gonna have to find a broker that has charts just like your MetaTrader in order for it to work properly. Because if there is a small difference, because we are scalping all those small differences, it's not going to help us. So just go to www.singaporesignals.com broker right here. It's not in the menu, it's a special site only for people in this course. There you can read a short introduction about the differences in brokers, and all the people from Europe, click on Europe, and everybody from the rest of the world like US, Asia, South America, what else is there? Well, everybody else, simply put. Just click on rest of the world and you will be redirected to another broker, because there's a difference between European brokers and brokers for like the US and Asia and so on. Because in Europe they're much more regulated, therefore there are less brokers, and for the rest of the world there is a huge choice of brokers. However, most of them are not regulated, so I'm working with a broker that is using the same underlying structure than the European broker. They both use the platform from Spot Option, and Spot Option is just like a framework that can be used by a broker, and they're providing the same chart sources as for the MetaTrader, and both brokers got the exactly same interface. So I'm just going to show you right now how an interface at my broker looks. That's it, bang the binary, you can see here Liam Schnell, and it's the same for the other broker. So here you can choose your asset. As you can see, there's a lot to choose from at the moment, and since we're going to do 90 seconds, just click on 60 seconds, set it to 90 right here, that's your expiry time. Here's the amount that you will bet, and here are the assets. At the moment there is not so much, but it's, as you can see, very early in the morning, and also the markets are not yet ready to be traded. Yeah, just to give you an overview of how this broker looks, and after I'm going to explain now what paper trading is, and then I'm going to show you how I'm going to trade, and I'm going to play some live trades, and you're going to see a whole video of pure trading. So that's it for now. See you soon. The first time when you hear paper trading, it sounds very boring and only for stupid people who are very unsure what they do and who don't want to lose any money at all. But it is the exact opposite. Paper trading is for those who really want to get their foot in the trading door, and paper trading is essential if it's going to go about testing out new strategies, testing out new ways of trading, testing out new money management systems. And since I guess that most of you never traded before, you have to try out all of this. So this is why I'm now going to show you paper trading, and paper trading is so easy. So first of all, of course, you're just going to open up your MetaTrader, And then you can just set up like I did here. It's very, very simple. Table with the asset, then what type of trade you're going to do, what your trade size is, trade entry, expiry time, ending rate, payout rate. So asset, type, trade size, expiry time, all of those can be set after you set the trade. So if you're in the MetaTrader and I took this trade here, for example, and you see, okay, this might be quite interesting here because the signal shows a good line. Then you can see here on the right side the value, or by just hovering right here, you can see the closing value. And this is, so the open value is the value that the candle opened with. High was the highest value in the whole candle. Low was the lowest value in the whole candle. And close is the time where the candle closed. So just take the closing time because you're going to bet on the next candle if you're using our custom indicator. So closing time here was 21829. You gotta be a bit faster than me, but I had to calculate in German. And then you're going to set the expiry time, just going to use your smartphone, and pretty simple, you're just going to put a timer into it for 90 seconds, which is 1 minute 30. Then you're just going to set up the timer to the time, and then if you hear the timer, you gotta look where it is at the moment. Then you're going to note this right here, and then you can see, okay, I did a put, because you don't have to write it in. The important thing is to get the timer going, so got your mobile already in your hand, and also to write down the trade entry very fast, and then don't change it afterwards. If you see that you might have gone, if you see, oh well, now would be a good time to enter too, don't do it, because you're actually just cheating yourself. So in paper trading, it's even more complex, because there's the temptation to trick yourself and to cheat yourself and to say, well, if this would be a real trade, I would have entered it then, or I would not have taken the trade. Don't cheat yourself. Treat paper trading as it is your own money, because in the end, if you're going to go into trading, you will trade with your own money, and you don't want to cheat yourself when trading with your own money. So be fast in writing down the trade entry and the expiry time, and just note all those things later on, because you know what type you made, and you also know the asset, and you also know your trade size. I mean, basically you've got one trade size that is fixed, and payout rate, just take any value. I took 83%, just take 80%, so that you also get a feeling for the results that you're getting. Because right now, with the $4 trade size, I'm making 7.32. If trade size would have been $10, I would have ended up with 18.3. Of course, this is, as you can see, 10 times 8.3 and plus 10 again, because you're also getting your own money back. So I could reinvest this for the next trade. So this is paper trading. Seems very simple, but please keep in mind, don't cheat yourself. Treat it like it is your real money. And yeah, just for the first 1 or 2 weeks, stick to paper trading. Try out different things. Don't delete the data, because you can always learn from the past, like we're doing in the charts. And yeah, keep it in mind, paper trading is very, very, very important. But also important is money management, which I'm going to talk to you about right now. Now we're going to talk about money management, because as I said before, money is the tool in order to generate more money, because we're going to reinvest it. So you really got to be careful, and you've got to get a good structure in order how to spend your money, and to calculate what can I lose at a day a maximum, and how much can I earn maximum on a day. So this is why money management, together with risk management, which is basically the same, only that risk management is concentrating on the chart and money management is focusing on your money only. So I'm going to give you a few tips on how to make a good plan for your personal money management system. Of course, you can also just copy mine or try them out so that you can get a feeling for which system works best for you and how you feel comfortable in trading, because at the end, this is what it's all about. You got to be comfortable in trading, and that's why I'm going to share them with you right now. So what is money management? Money management, if you break it down, is an effective way to maximize your profits and limit your loss. You see the purple square right here? This is your account balance. Let's just say you open up an account and you put $250 on it. So I've had some students who traded 4 or 5 times and who used $50 as a trade size, which, well, surprisingly ended up in their account being closed because they've got no money left. Because if you're not really into trading, then I would never suggest that you're using more than 5% of your trade size, of your account as your trade size. Means you've got an account balance of $100, then never trade more than $5. You've got 200, never trade more than $10. Of course, this is only for the beginning, and with every one trade, you're building up your capital in order to be able to do a higher trade size. Higher trade size means more revenue, means more money for you and more profit. But you got to start small and build up your own capital in order to really get rolling. So trade size is always 5, maximum up to 10% of your account balance. I would suggest 5% if you never traded before. So now the question is, how much do you trade per day and what do you get out of one trade? And I'm just going to calculate with you a bit. So let's just take a look at safe trading, that's what I call it, because you're going to do one trade a day. And let's just take a look at it, because it says one trade is $5 trade size. Means every trade will cost you $5. You're doing 20 trades per month, because on the weekends markets are closed. So 4 times 5 days from Monday to Friday. And each trade you're getting a payout rate of 80%. $5 times 0.8 is $4 of pure profit. Let's just stick with 80% because normally it's between 70 and 90, 75 and 90. So I think that 80 is quite good. Normally you would get around 83 or 84. So if you would only do one trade a day for 1 month, means 20 trades, you would be out of the month with $80 of pure profit, which isn't the worst. But the second month you can now add $4 to your trade size, because every time you won a trade last month, you've got $4 of pure profit. So now we're reinvesting those $4 of pure profit, still only doing 20 trades, but now since we're doing it with $9 as a trade size, 5 plus 9, we're getting profits of 7.2, means our monthly income is going to raise up to $144 per month. And we're talking about one trade per day here. So each day you got to get in front of the computer, read the charts for around 10 minutes, place a trade, and you're out. And normally I'm doing around 3 to 5 trades a day, because that's when I'm feeling most confident. Because most of the time I'm doing pretty well with 4 out of 5 or 5 out of 5 trades that I've won. And of course the temptation to go further and to win a 6th and 7th and 8th trade is there. But it's not going to work out, because once you've chosen your system, you really got to stick to it. So now, after 2 months, you would have the initial account investment of $250 plus the $80 from the first month plus 144 from the second, and you're nearly at $500 and you could think about then cashing out the initial $250 so that you're only trading with your profit. Now let's take a look at medium trading. So medium trading, still the same opening account balance of $250. Now your trade size is going up to $10. You're still doing 20 trades, and for each trade you're getting 8.3 of profit. So one trade a day for a month will leave you at $166 per month, and we're talking about 20 trades in 20 days. So that's very, very low. That's the most basic thing. Now let's just say you're doing 2 trades a day for a month. Then we're at $332 per month, which is quite a nice income for me if you only have to spend around half an hour in front of your computer every day. And I guess most of you are more than half an hour in front of your computer. In fact, I'm on the computer all the time because I've got a lot of things to do, and it just doesn't hurt to leave the software open and to take a look at the charts once in a while and to find a good trading solution. So now we are going to say that you're going to lose 2 trades a week because you're a beginner, and 3 out of 5 trades won is quite realistic. So we're going to put $80 away from your profit, which will still leave you with $252 per month in your first month, and with an opening account balance of $250 with 40 trades, and you can even lose 2 trades a week. Now you could also say that you're doing one day 1 trade, second day 2 trades, next day 1 trade, 2 trades, 1 trade, 2 trades. So you can do it just as you like. However, if you lose 2 trades a week, no worries, because you still have doubled your initial investment. So now, that's why I wrote cash out. I would suggest you to take the initial $250 that you once put in the account, take them back out again, and continue with your profit. Of course, it will take another month in order to get back to your level where you've been now, but in case that you lose any money or that anything occurs, your initial investment is safe and you've got nothing to worry about, because you're now making a pure profit trading out of the profits from the last month. Now I'm going to show you one more system, and it's called chess management. And this is quite funny because at first it sounds like a shady internet scheme where you make a lot of money in a very short time frame, but I'm going to mathematically explain to you why it works and also why it's quite risky, and I suggest you to try it out once or twice, but rather stick with the medium trading or safe trading. So on the first day you're going to start with $5 times 0.8, because we're getting an 80% payout rate, $4 in profit. So for the day you've got $4 of profit. With the initial 5, that's $9 that you can spend on the next trade. So you're starting with 5, adding 4 of profit, and then the next day you can reinvest $9. Those $9 basically only consist of $5 from before. So those $9 that you can trade with are worth $5 from before, because you're stacking up the profit. Now second day we were at $7.2 of profit, and we're adding them to the 9 in order to trade on the third day. Now those $16.2, they have the value of $5 because you lose the leverage and reinvested the full profit again and again. Of course, now you could say, well, 16.2 is around about $15. You could just start again 3 times, because now $15 divided by 3 gives you 3 times the opportunity to start exactly this chess management once more. So you always got to keep in mind that those 16.2, they've got a real world value of $5 because you are building up on those $5. So now, day 3, making another $13 profit means by day 4 you're at $29.2. Now of course you're going to reinvest them and you're making a profit of $23. Now adding this up will lead to day 5, where you now can trade with $94, because this is the profit that you're going to get out of the 5th day. Of course, you don't have to limit yourself to 5 days. You can just do 5 trades per day in order to try it out. So you see, with only 5 trades and a good leverage, you can make $94 out of $5 by placing safe trades. So 5 trades is quite a lot, and you have to win 5 trades in a row, of course, in order to get there. But what I'm normally doing is, around when I'm at 16.2 or 29.2, I'm just cashing out, I'm leaving the chess management and I'm starting all over again. So from the second day, where you're at 16.2, you can already start 3 new rounds. And if you're going to stop all those 3 new chess management rounds again at 16.2, you're also going to stack up your investment pretty fast. So, to conclude this subject, trees that are slow to grow bear the best fruit, said by Molière, a French philosopher. So what I suggest you in the beginning, you're doing 1 up to 3 weeks of paper trading, means you open up your account, but you're not going to play around with your real money, but you're going to take a sheet and make notes on it. We've already had it in a lesson before. There are various systems and they give you a feeling for the market. So you have to try out various trade systems, 1 trade a day, 2 trades a day, 3, 5, just see how well you're doing and get a feeling for the market and when it's a good time to enter. Then with the medium trading, after 2 months, that's safe trading. After 2 months you can cash out, or you're going to do medium trading, and I would really suggest you to cash out the $250 right in the beginning so that you've got a confident and safe feeling. Then we're at pure profit trading. Now, with a trade size of $20, you're making a profit of $12. If we're going with 0.8, means that if you're doing 1 trade a day for 20 days again, so the profit that we will get out of the $20 is 16, because $20 times 0.8 is $16, which would do a profit of $320 for a native speaker. It's sometimes very hard for non-native speaker. So we're at $320 of pure profit. And if you're going to do 2 trades a day, we're at $640. And I think that's a pretty good starting point. I would suggest you cash out the money, try those different systems in paper trading, write your fictional account balance on top of the sheet, and then see would your trades be profitable. If so, then start with real world money. If not, then just try it out, go over it again, arrange your tactic, or you can also go to www.singaporesignals.com and you can get in touch right there and we can maybe set up a solution for you and discuss different coaching strategies. Hi there. So, in order to start your first real trade, I'm just going to go over what we've learned so far. We've learned about trading patterns, trading on the Forex market, paper trading, and also the basic indicators as well as our custom indicator, which you should have set up by now. If not, just go on top and rewatch the video, because now you're going to need it. I've recorded a session where I'm trading a lot. It's from the 6th of April 2015, so it might be a month or 2 months old. However, it still remains the same the way I trade. And this is why I'm going to show this session right now to you, so that you can get a feeling of how I'm trading, when I'm doing the right entry, and how to stay calm while trading. Have fun with this one, and here we go. Hi there, Liam Schnell for Singapore Signals. So in this video I'm giving you a bit of day-to-day trading. I've traded today a lot. Today is the 6th of April 2015. Right now it's 5 p.m. It's 5:15 p.m. And if you want to know what a strange German person is doing and why he wants you to trade and why he wants you to mentor, why he wants to mentor you this way, then you might just take a look at this video. I've recorded some of the trading of today. I'm explaining the signals, I'm explaining how I'm trading, why I'm trading, and you're also seeing how I'm placing the actual trade. So this is live trading, except for it's not exactly live, but it will be a few days old if you see this video. Well, that's everything to say. Trade safe and enjoy the trading I did today. It was great fun. Hello everybody, my name is Liam Schnell and this is Singapore Signals. Today is Monday and here in Germany it's a free day. because we're celebrating Easter, and that's why I'm trading a bit at the moment, and I'm having great fun with US dollar to Canadian dollars. As you can see here, as I'm talking, there should be the next signal coming in. You see here US dollar to Canadian dollar, US dollar to Canadian dollar, and now it's going back down again. You see here I made 2 puts right here and here, one time with 50 US dollar and one time I misclicked and I just said 5. However, I still won. Here 58 it was the payout, here 8.50. And I just wanted to show you how simple it is if you can read the signals and you've got your software open. So I'm just going to open up my MetaTrader. Chart is US dollar to Canadian dollar 1 minute. And you can already see those easy to spot bumps. So first signal was at 11.23. So let's just go to 11.23. Yep, that should be around here. Yes, right. You can see it down here. Here's the time. And here it triggered because RSI has been above 90. Here we have been at exactly 100. And here we've been over 0.9. So it triggered saying, this is going to go down. Let's zoom in. We see the candle right here. It got all the way up and then instantly fell down. So this was an easy 85 US dollars profit. And then next signal fired right here. As you can see, again, we've got the exact same situation. It was building up 1 bar, building up 1 bar, and then I've just been entering right here and it's going massively down. We've had the same here, and as you know, we can spot that here's a limiting line, so it won't get any higher. Let's just see what the chart says. Same situation here, only that money flow index wasn't right, and also the marker was not perfect. So I said, let's just play it safe, because it can happen. Of course, it looks very easy to spot, because if it's no movement and then going all the way up, then you can expect it to go all the way down again. However, here is also nearly no movement, and then it just went up. So I wait for the signal, because I'm more of the safe trader. And as we see here, nearly no movement, big spot up, and one more, and this one more was perfect for my entry. So I'm just going to cut all those small pieces together that I'm going to film today. Great Britain to Japanese should be going up. Yes, seems like it is going to go up. So let's just make a small bet. 8.8, I just wanted to drop a bit. 8.8. You can see the small difference between the MetaTrader 800 and 808. Now it's going down. That's what I wanted to see. 79998. 98 might be good. 82. I wanted to get down below 92. So there we are. Let's just hope that it's going to go up. Seems like 998182. So this one's still bumping around here. I was waiting to enter the trade because here, as you can see, it did not go below. However, we had this huge drop that I thought, why not just go in? You see, is rising, everything. We had a signal right here, Great Britain pound to Japanese, Great Britain pound to Japanese, it should be going up. And I just followed the signal. I made a small bet of $5. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1, and another one signal for today. Easy money. One, and it's gone again. Okay, see you on the next signal. Me again. Just another sweet little signal I wanted to show you from today. As you can see, it's really happening today, everything. Short time frame. You see, I was informed that US dollar to Japanese yen should be going down at 5.6, now it's 5.7. You see the signal triggered white right here on top. Here it did not trigger because the money flow index wasn't right, but here it did trigger, and you see, although it's going up here a bit, you could have entered right here on top of this candle, and now it's going down again, and you would have entered right here in this area, and then this would have been a perfect win for you. And now it's going up there again a bit, seems like. However, software says no, don't trade it. It could be a false positive, so I'm just going to leave it alone. No more trading here. I just wanted to show you how accurate the software is. It did not trigger here, it did not trigger here, it did not trigger here, but it did trigger here when it really reached the highest point and then got back down again. So, see you in the next few minutes, I think. Hi there, welcome to the Trading Madness. As I said before, let's get back to you in a few minutes. Well, it is a few minutes. You see this huge spike right here. I'll just show you right here. It was up there. It was at a very high point and it got even higher. It was insane. I tell you, you see there's a lot of information here because it just went so enormously high. Now it's going back there again, so I just said okay, I'll risk it. It seems pretty solid. There's a signal coming in for US dollar, Canadian dollar. Of course, everything is lined to be perfect. You see, I'm gonna get a payout of 170 out of this sweet little trade. 4, 3, 2, 1, and that's $170 as profit. Hello guys, me again. I shouldn't be recording right now because, as you can see, I'm currently working on a new video that I'm cutting together. However, I just got this great signal and I wanted to share it with you. Take a look here, it's now 3 p.m, 2 minutes, nearly 3 minutes time. We've had the signal for, where is it? US dollar Japanese yen going up at 2 p.m. and 2 minutes before 3 p.m. So let's just check here. So it was triggered right here, as you can see below. It says 2 minutes before 3 p.m. and the signal was going up, and just look at this wonderful upwards trend. The signal did not trigger here, it did not trigger there, although it was in the right area, but we waited for money flow, we waited for a demark, and it got just straight up here. That's perfect, what else could you wish for? Okay, that's it for now. I'm just going to continue cutting the others. There I am again. It's now 3 p.m. and 12 minutes. You see, today is real trading marathon because I want really to give you a day that you can follow me and you can see what I'm doing and how my system works and the software. So, Andre is online. That's pretty awesome. I can't hold my excitement. However, there's something more exciting. Just take a look at this. US dollar Canadian dollar. You know that we had some fun with it, or I had some fun with it before. So going up at 11. Well, let's take a look. Did it? Pretty much. So you know, I entered right here. I entered at 382. So this is around here. I've got a drop. Now it's at 456. The difference is amazing, and I just won this trade too. And you can see still going up, going up, going up. I waited one candle until it got here. Perfect uptrend. Great signal. 11, now it's 14, 3 minutes, and that's what I call pure and precise profit. Well, I'm just going to wait for the next signal until I'm going to say, hello, surprise, it's me again, let's trade. Okay, so see you then. Hi there, I'm just in time to show you the next winning trade on US dollar, Japanese yen. Pretty easy once more. Here you can see 018, 0041. A small payout because I'm not actually trading at the moment, I'm just cutting all the videos, and whenever there's a signal, like right now, US dollar, Swiss franc, cut it, and then I'm just going right in. You can see here, just let me check my here, yeah, right, US dollar, Japanese yen going down 4.2, then me entering right here and it's on top, going down, winning the trade. Now it's already going up again, but you can see here relative strength index is not that good, and also I've just traded this currency, so I'll just leave it alone. Yeah, just another short motivation to show you my signals are working. Very good. See you then. Hello everybody. So here I got into my last trade for today, because I always told you not to trade so much, but today I just wanted to know it and I traded everything I could. Well, you see it, nice solid 80 US dollars profit in the evening. That was fairly easy. I mean, just take a look here. It bounced down here, then the signal triggered. We're talking about US dollar to Japanese yen, US dollar to Japanese yen. It triggered 1 minute after 5 p.m. So where are we here? Right, 1 minute after, in this case 3 p.m, but there is a time difference. And it's going up all the way here. Super solid win. Let's see if it's going to be validated. 1, and that's it for today. I made around, I think, 5 trades, 6 trades in total. I won 5 of them. I lost 1 because it was just going crazy, and well, you're losing money, of course. However, I made a sweet around 150 US dollars this day, while I was mostly cutting the videos, so that's pretty good. As you can see here now, I'm searching for Lachs in Weißwein. This means salmon in white wine, because I'm going to cook me some dinner now. It's 5 p.m, a 9 to 5 working day, and you see it's still going up here. Perfect. Okay, that's been a great last trade I got in time to show you. I received another signal too at this time, Euro, Great Britain pounds. Let's see. Well, another winner. It should go up. It triggered 3 minutes after it, so 3 minutes should be around here. Yes, triggered that it's going to go up, and it got up a whole bunch. So good winner. Let's go back to US dollar Japanese. Also perfect. So this was a slightly compressed trading day of mine. I'm cutting this video in order for it not to be so long. I think we're talking about 5 or 6 minutes here. Trade safe. I hope you've seen a bit of what I'm doing here at Singapore Signals, and if you want to do just what I did right here, please get in touch with me. There are no shady contact forms, just get in touch with the real person. We can do a Skype session, you can use WhatsApp to get me on my mobile phone. You can write me an email, of course, if you want to. It may take a bit longer, but if you're more the fan of emails, you can also send me a letter if you want. No, please don't send me letters. Please use one of the existing normal ways of getting in contact with me. So, if you want to see what I've done here and to understand it, get on singaporesignals.com. It's right here one time below, and then we can talk and yeah, just get in touch and we can fit you a personal strategy. And it's still going up here. What a perfect signal. I mean, it's even on top here. RSI, of course, I'm not trading here again, but lovely. Okay, have a great day, trade safe. Liam Schnell for Singapore Signals. Bye. Hello everybody, Liam Schnell here, and welcome to the download and software section of this course. Now I'm going to explain to you how to get the client in order to download it, and also I'm going to explain to you how you're going to install it, log in, and how you're going to use it. So it sounds like much of content, but it's going to be very quick. So first of all, just go to www.singaporesignals.com. Just as you can see here, type BSTS, stands for better safe than sorry, and then client zip. I'm also going to put it as a subtitle right here, and then you just click on enter and you're going to get the file. Well, Chrome tells me, web, pay attention, because there's a setup exe inside, because of course you have to install the program. So I'm telling Chrome that I want to keep the file, opening it right up, and as you can see, there is a readme PDF and setup exe. Readme PDF contains the following: username for your software and the password that all of my students from this course can use in the software in order to get access. Normally that is restricted and personalized to my other students. So just going to click on setup exe. It is in German for me. It should be in English for you. So as you can see here, name Singapore Signals from singaporesignals.com. So I'm clicking on install. Now we're getting a software. And so far that really is fairly easy. So here we are, Singapore Signals, and here's the login window. So I'm just going to enter those things here. Course 2015, password, I want the software. Clicking on remember password, I'm going to log in. And now you're logged in. Seems a bit strange because it's totally blank, but when there is no red flash, it means that the software is connected to my private server and that everything runs just fine. So this software does the same as we're doing in our chart reading. Means on my virtual private server, 1 second, I can show you. I'm just going to do a remote. Whoop, it's loading. There we are. So this is my own private server where the software is calculating all the signals and is analyzing the charts. So as you can see here are the currencies. And the last alert was 2 seconds before 8 AM. And it looks a little bit different because it's another version of my indicators, as you can see here. However, if you're going to zoom in, then it's nearly normal again. You can see the 3 lines here and how they move. So we've got all those currencies that are calculated. Those are the most secure ones. XAU USD is gold and XAG USD is silver, just for you to know. So I'm just going to close this again. So whenever there's a signal coming in the software, you can see either an arrow going up, means it's a call, one arrow going down means it's a put. Here you can see the currency, and also you're going to get the time when the signal was released, so you can check with a little timer up here, which isn't in fact a timer, it's just a clock. So you can check if it was any good. So as we can see here, last signal should have been around here. And I'm just hoping that there is a signal popping in right now. Let's check where this might be the case. Doesn't look too good. So I'm just going to wait until the signal came in, then I'm going to show you in the software how it looks. So now in the end it did eventually happen. We've got a signal right here, came in 4 minutes ago. It's about gold going up, and you can see here this icon means there could be something going on, but it's not a clear signal yet. And this means there is a clear signal. So in this case, they've been on the same time. Normally you get this around 5 seconds before. So you've got time to open up your MetaTrader, open up the binary. And as you can see here, gold signal was that it's going up. And you can see here will go up or down. Signal was here at 30 and it clearly went up. So this would have been a very, very safe win. And of course you could also always confirm it in the MetaTrader. So this is how the software works. There is also a signal that will be played on your laptop speaker or computer speaker. So you know, no, I don't want to start a chat. So you know that there is something going on, even if you've got this minimized. So there will be a sound, it goes like ding ding ding. And then you know, okay, there is a signal coming in. And then you can just open it, check if the signal is already passed. It shouldn't, and then you can just get into the trade and confirm it on MetaTrader. By the way, this is not gold here, this is Australian dollar to US dollars, so don't wonder why it's going back down again. As you can see here, gold is still rising up. Okay, so that's been it for the software. Stay tuned. If you've got any questions, just get in contact with us and we will resolve them as fast as possible. Have a great day. Leben schnell for Singapore Signals.